Listen to me. I want you to stand up straight, take a deep breath, and look me in the eyes, because what we are going to talk about today is the one thing that scares you more than anything else. It's the what if. What if you can't take care of yourself? What if your spouse needs more help than you can give? And most importantly, what if the cost of that care wipes out everything you have worked your entire life to save? We are in the year 2026, and the reality of nursing home costs is not just a wake-up call, it is a financial siren. I need you to hear this. The national average for a private room in a nursing home has now crossed over $119,000 a year. That is nearly $10,000 every single month. If you are sitting there thinking, "Oh, Susie, I have $1 million, I'm fine," I want you to do the math. In 10 years, that million is gone. Just like that. And that's if you're only paying for one person. Now, why is this happening? It's the perfect storm. We have an aging population, a shortage of healthcare workers, and inflation that has stayed sticky in the service sector. But here is the thing, where you live is going to determine whether you stay broke or stay solvent. This is a state-by-state breakdown, and some of these numbers are going to shock you. Let's look at the danger zone states. If you live in Alaska, may God bless your paycheck, because a private room there is averaging over $360,000 a year. That's $1,000 a day. You go to Connecticut, you're looking at $183,000. New York? $173,000. Oregon and Massachusetts are right there behind them, hovering around $170,000. If you are in these high-cost states and you don't have a plan, you are playing Russian roulette with your retirement. Then we have the states that are more reasonable, if you can even call $70,000 reasonable. We're looking at Texas, Missouri, and Oklahoma. In Texas, you might find care for around $70,000 to $80,000 a year. That is a massive difference. Does that mean you should pack your bags and move to Oklahoma the second you turn 80? Maybe. Because your money has to last as long as you do. I know what you're thinking. You're saying, "Susie, Medicare will pay for it." Stop right there. Do not pass go. Do not collect $200. Medicare is not long-term care insurance. Medicare will pay for the first 20 days if you've been in a hospital. From day 21 to day 100, you are going to pay a copay that, in 2026, is $217 every single day. After day 100? You are on your own. Completely. So what is the fear? The fear is that you'll have to spend down every penny you have to qualify for Medicaid. And Medicaid, listen to me, only pays for a semi-private room. You'll be sharing a room with a stranger, and the state will take your Social Security check and your pension to pay the facility, leaving you with maybe $60 a month for personal needs. Is that the life you envisioned? No! So here is your actionable takeaway. You need to look at your must-pay list today. If you are between the ages of 50 and 60, you must look into long-term care insurance. I don't care if you think it's expensive, it is a lot cheaper than $10,000 a month out of pocket. If you are already in your 70s and insurance is too high, you need to look at asset-based long-term care, a life insurance policy or an annuity that has a long-term care rider. And most importantly, you need to have the conversation with your children. Do not leave them a mess. Do not make them the plan. Your children are not your retirement plan. You need to be honest about what you can afford and where you are willing to live. I want you to be powerful. I want you to be protected. But you cannot be powerful if you are in denial about these numbers. Check your state, check your savings, and make a decision before the decision is made for you. Because you deserve to retire with dignity, not in debt.